None of VPM Partners, Bob Kendall, or any of its officers, directors, employees, other personnel, representatives, agents, or independent contractors is, in such capacities, a licensed financial advisor, a registered investment advisor, or a registered broker-dealer. None of VPM Partners or its personnel gives investment or financial advice or makes investment recommendations, nor are any of them in the business of effecting trades or directing client equity accounts or giving futures trading advice tailored to any particular client situation. Nothing contained in VPM Partners broadcasts, on its websites, or in its written materials constitutes a solicitation, recommendation, promotion, endorsement, or offer by others described above of any particular security, other investment product, transaction, or investment. Copyright 2014 VPM Partners. All rights reserved. Terms of use apply. Reproduction, adaptation, distribution, public display, exhibition for profit, or storage in any electronic storage media in whole or in part is prohibited under penalty of law.
Good morning, everyone. Well, we've had another exciting day already. We have fun times. We got Mitch here. Once again, the attire, short sleeves versus sweater.
That's right.
Different areas of the country here.
Still working on the last pile of wood out right outside my door for the wood stove, so I'm hoping I don't have to restock that this season.
Yeah. Well, this morning we've got Mother Yellen talking to us again, and we've managed to get a rally going on the market since then. So we were down this morning, and now we've rebounded back up again. She's assured us that housing's going to get better. I'm sure everybody feels better now. It's amazing. I think, in a way, everybody's getting sick of listening to the Federal Reserve and the Senate and everybody actually trying to run this country from an economic viewpoint. It's getting pretty irritating, I think. I was shocked that some of the senators, them being Democrat, I'm sure, not knowing all of them, talking about income equality and with the Federal Reserve. I didn't know that was their job, so evidently it is now. As we go through today on the market thunder sessions that we've been doing, we've been covering, most of the time I've been covering the S&P. Today the NASDAQ is just coming apart at the seams, and I just keep wondering if there's not going to be a contagion of some sort that flows over and ultimately just takes everything down. There seems to be a bottomless pit on this thing. And if you remember way back when in 2000 we saw this is what led the markets down. It was interesting because in 2000, if you look just at the NASDAQ, it was way worse. We went from 5,000 all the way down to 2,000 on the NASDAQ index. The S&P didn't do that bad, and in fact on VPM running all the S&P stocks, we actually, I believe it ended up, I don't have the number right in front of me, like up 11% in 2000, just because it was able to rotate out of the large caps that were getting hammered, the Intels and all the techie stuff that was out there inside of the S&P, and it managed to rotate to the mid-cap stocks, anyway, we're seeing, I guess, a similar rotation. Ultimately, it took down the whole market, and maybe this bubble or whatever you want to call it that's being created by the Federal Reserve. It's interesting, I guess, how all the biases that are out there. So today we'll go through our usual routine. We'll talk about everything we normally do on these shows. Yeah, but I think, like I said, I'm going to talk a little bit more about some of the NASDAQ, and we're just going to randomly, I'm going to have Mitch Google some stuff while we're talking here this morning and see if we can't come up with some things to look at, like some of these NASDAQ stocks that are just getting crushed. And boy, am I glad if any of you have that out there that you've got VPM, because all of these big ones were out of these things and they're just getting cratered. So let's go ahead and let's go to the first screen here, and let's start taking a look at, go over for a minute, and look at a couple charts here. These are the futures charts that we have here. Not sure why the green is behind our little chart here, but that's okay. It's not too distracting, I hope. Anyway, what we're seeing here is these cycles continue to like land almost spot on. You can see here, which I've got the 5-minute futures here. We're just about 10 minutes late in this cycle hitting exactly right, and we saw this big rebound again. So this week, Monday, big we get the big down day followed by the big reversal. Yesterday we get an inside day, which we are, by the way, not working on an inside day today. We were actually able to go down below Monday's low briefly and then rebound back into the range. And man, am I sick of this trading range. It's just ridiculous on continuing to watch this thing bounce around in here. But I guess for now that's what we're supposed to be doing, and maybe trying to find some other things to rotate to, but I haven't really found anything. Interest rates continue to stay down low. We'll go through that, but these cycles keep hitting spot on. Let's take a look. This is a 5-minute futures chart. Let me show you the hourly graph here. And these little volume spikes that I've talked about before tend to come right at these turnarounds. And once again, not only right there, it was the hourly cycle came in spot on. I think I've talked about this, about 23 hours. So we were destined, I was looking at it last night when I was doing commentary, we were destined to set up in the first hour some sort of reversal. So if we'd have been trading higher, we probably would have went down. And in this case, since we were trading lower, we did get to see a rebound off of these lows. So one of the things, if you recall, I've been talking about, and it's finally come back into line, if you look at these ribbons that are on this chart here, the ribbons have been above the market, which I talked about, sets up sort of a veil over the market, and it was unable to get above those levels. Just to point out a couple of those here where I'm talking about. I think this is interesting. I just drew an arrow through this level, and then you can see that the market just flatlined while that veil was over it. And I've seen this happen before. Same thing again. Yesterday's action, we got a flat. There was a veil above it. Now, finally, the market action has fallen down where these are moving average, exponential moving average ribbons, and we've seen them come down where the market is trading within there. So it's actually more orthodox, and this type of configuration will have a better probability of reversing and starting to trend upward. Oddly enough, after we see these big swings, this is what's happening. And the interesting thing about doing technical analysis, especially when you're in one of these sideways modes, it's you start to get a feel for the swings within the charts. You know, I've been talking about, I don't know, maybe it's been 10 or 12 weeks now, 1840 to 1882. We got over 1882 just day before yesterday, 84 and change. Market reversed. Didn't matter. There's no follow through. You can't get two sessions in the same direction so far. But this pattern that we've seen just on the hourly, and this is the 24-hour chart on the S&P, this has been, for the first time, I'm going to call it looking more orthodox than it has for a while from the standpoint of how the moving averages are positioned here. So we're gonna bounce around a little bit here. We're going to stick with our typical indexes to start with, and then we'll rotate over to this ugly collapse that's going on in the NASDAQ. So we'll start here at the daily chart on the S&P. This is the S&P cash now. We're starting to see where all the patterns are just flat. I mean, it's it's pretty amazing just how flat everything is. I'm going to bring up the whiteboard here just so I can discuss some of these things. But I'm going to draw a line right down the middle of this, pretty close anyway. And it's interesting that where I just drew the line, the 21 and 40 period moving averages are setting right there. We've actually pivoted twice in the last, let's say within the last 10 days. We went below those averages and come back above them. They're absolutely flat as a pancake. You've got the you see ppm2 over here is got a 0.07, and you got 0.008, which is about as flat as you get, and then you see the ppm1 now is at minus 0.1. So it's got there's nothing going on here. There is no trend, zero. So we're just kind of waffling between those lines there. I'll go down to, usually don't go to this level, but let's go down just as I'm processing all this. This chart here, now this is our hourly graph that we have, and that is that is actually going to give us I guess a breakdown of all of the individual stuff that's happening here from hour to hour. And you can see the first hour trading here, which is where that cycle came in on the cash once the market's opened. This is the cash indice. We see a big spike, and now we've traded right back into the moving averages again. So on a short-term basis, what we're seeing is just a continuation of moving to an extreme. Matter of fact, the low of the day today was 1859.79. If you look at the daily sheets that we put out, 1859.80. So 1 penny. It came right down to the S2 support today and just rebounded right off of there, corresponding with these cycles and all this stuff. So I realize this doesn't do much for us for utilizing VPM on none of this is just kind of noise. But the pattern, so the reason why I do all of this analysis is to make sure that there is some order that you expect to see how the market's on trading. This is, well, as long as they're acting within some reasonable order, then they become somewhat predictable. And if you ever hang around any quants, the word somewhat means that it has some predictability. It doesn't mean, it just means that it acts as it should within statistical significance. And that's what we're seeing here. These numbers that are put out every day, the 3-day trend is still remaining. It's gotten back up to around 15 or 16. It's not an extreme. Usually gets up to about the 3-day average range will get up to about 21 to 25 when volatility gets cranked up. We have seen a little bit of movement. Yesterday kind of kicked it up a little bit, but we're still fairly narrow, which tells me we're not at the point when that thing contracts down below 10 is when the range will explode again and we'll get a directional movement. Right now we haven't seen that. We get down to, I think, 1096 the other day when unemployment numbers came out, and as we know, that was pretty much a dud that day. So so let's go back over and let's take a look at the intermediate now. Go back to the weekly graph here. And as I've been talking about, there are some minor trends going on. As we look at the PPMs here, I think it's even more boring than it was, I guess. We've got 0.8 on the PPM1, 0.25, that's about what it has been, and 0.23 on the 40. So what that tells us, the underlying trends are still up underneath these trends. So there's some, the PPMs, by the way, stand for price pressure momentum, and those were derived from a theory that I worked with Professor Prater, one of my old partners and mentors back in the early 80s, and we were trying to find something that told us some characteristic about the moving average that told us that that led to an understanding of the trend at all levels. So there's actually three basic trends that we follow in VPM, and then in VPM 3.2, there's actually a fourth indicator, which is actually the 89-week moving average that comes into play. So it's 10, 21, 40. The PPMs 1, 2, 3, and 4 related to those 10, 21, and 40. So when we see this type of action with a 0.25, it tells us there's only about a 30% probability that we're going to decline below those levels. So there's, we're seeing what we're supposed to be seeing here, and that's why I discuss these things, because I think it's important as you guys go through your days, and anybody that's involved in these markets, to have at least some perspective and some basic expectation of what should be happening within the context. Now, markets will reset and get a big move. That's okay. That's how that works. And everything, trying to predict the market is as good as flipping a coin to a point. But when you get into some of these patterns, like what we're in now, 12 weeks of sideways, it's pretty hard to figure out which way it's going to break out. And as I've talked about, as we continue to go sideways, every week that we go sideways, we've lost some momentum. And you can see that there's been a slight recovery in some of the momentum. If we look at over here, I've still got the whiteboard going. On the PPM1, it's been has not recovered. You'll notice the upward slope on PPM2. But then on the PPM3, you see it's actually decreasing. It's actually losing momentum. So it's a mixed picture, but it tells us that there's this small little piece of this trend left. So let's go from here to last but not least, and let's take a look at the monthly. And it's interesting because, as I've talked about, when we start looking at the NASDAQ, we're going to see a much different picture. The S&P has been very orderly. We can go all the way back to really mid-2012 when this trend really started. It started to accelerate in September through October, maybe November of 2012, and we've seen this trend unfold. This pattern will complete itself. Whether it completes through having one more spike or not, it's pretty difficult. But I'm kind of beating the same horse. The momentum that we're seeing on the longer term values continues to confirm just what I've been talking about, and is that we've got 1.06 on the PPM1, 1.36, and 0.99 on the PPM3. So what that tells us here is that the long-term trends are still pretty robust and are going to be supportive. Anytime the market goes down, we're not going to see a big rollover right now. So that's not in the card. There is a really good chance that we're going to see a major top formed here in the next, maybe sell in May and go away. We'll see what happens here. Maybe it'll be in June or even in July before this comes out. Maybe when we get in the dog days of summer. But the bottom line is there is an evolving trend, and a very robust trend on a long-term basis. Just to develop this idea just a little bit more, let me bring this up here. So you can see over, let me move that over so you can see it a little bit here. So this value that we have right here, so you can see, is the 10-month moving average is at 1799. I've been harping about a 1795 pivot number. That's part of the equation. There's a Fibonacci situation is unfolded underneath this market that makes that pretty critical. But look where the other two averages, where the big support is, 1656 and 1495. So what's happening right now, we're looking at PPM2 is going up faster. It's 136 versus 106 on the PPM10. So what's happening right now, and this is the final phase, is the 10 and 21 will start to contract and get closer together. And when they do, that's where the market rolls over. So this is the perfect setup the shorter term stuff is starting to lose some momentum, and the intermediate is still accelerating, which tells us there's long-term support, but it also tells us that they're contracting together, which is the point. They have to get close together so they can cross under to change the trends from short intermediate to roll over. So we're just watching. This is like watching super slow-mo movies, like watching your favorite play in football in super slow-mo, and you're seeing every little drop of sweat. This is really this is slowing things down when you start to get to this monthly level. But that's what's going on with the S&P. It's the same that has been going on. The patterns that are setting up are just boring, beyond boring on a shorter term or intermediate basis. We see we're down 17 points yesterday. Now we're up 7.63. The danger of the pattern that's unfolding right now is that we get a rebound today, and then we see we could see the 1859.79 level, the lows of today, challenge tomorrow, and then start to exceed. I mentioned in commentary last night 1851.90 to 1841.25. Those are becoming the target range, but notice that familiar number, 1841, is the bottom end of the pattern that we've been watching unfold for 12 weeks now. So nothing new actually, other than there seems to be some emerging weakness that comes out. Let's go from here, and let's see if we can maybe bring in the composite. This is exciting. This is a 1 minute graph of the composite, and actually what you're seeing is the actual logic. So earlier this morning, let me just see what model I've got here. 1.2 on here on a 1 minute basis actually made a nice trade on the NASDAQ here intraday. Let's go to the daily and start to take a look at some of this stuff. I'm going to just for the moment take the status off this so we can just look at the chart. So you can see the stair stepping down. As some of you that are trying to learn about technical analysis, I try to do some education here. I am a old school guy. I've been doing this stuff for a long time. It's hard to believe. I saw my first chart in my life at 1979, so that was a couple years ago. Needless to say, some of you weren't here then, maybe like Mitchell. But anyway, but the bottom line is, I've been watching these patterns for a long time, and the way that you start to understand what goes on within the patterns is studying them and watching them. I think I don't remember if it was on a Process Warriors last week, but one of the things that I suggest that you folks do to try to control some of the emotional things that can happen within your practice is to evaluate and even keep a log. I used to do this years ago before, I guess going back to what we called Market Mind, the original logic back in 1992 when I was selling it in TradeStation and Supercharts. One of the things I would do is I was doing seminars teaching people how to do trading and how to set up trades. And one of the things that I had everybody do is to write out a log and keep track of some of their decision making, and especially if they were doing any kind of discretionary trades, like I think I'm going to buy this stock at some point, here's my stop, here's where I think it's going to go, and you set up all your ratios and all that. But the important thing was the debriefing part of the process. And if you guys watch our videos, our training videos on how to use VPM, I suggest that you keep a log, and it's a similar log, only for different reasons, in that you want to write down the decisions you make and have somewhere where you can go back and reevaluate some of the decisions that you made and start to determine what they are. I'm hoping that on Thursday, I'm just making a note to myself here, is that I want to talk about this human bias that I've been really paying attention to a lot, and trying to find ways that I can find it so that you don't do it. It happens in every element of life. So when you're looking at these charts, it's very easy to have a bias or an opinion in there. So this, I'm going to draw out this structure here real quick, and I think this is these are the things that I see here that are somewhat important, and I'm going to try to draw some things for talking points here. Looking at just the daily NASDAQ here, we're looking at the potential for this to be this first arrow here up at the top right here. This would be wave 1. Let me get my arrow back. Let me take that off. This would be 1, and then we would have wave 2 here, and then wave 3 down. And I drew this horizontal line over here to show that we've come back to that level, and what we probably will get here is something like this on this chart. If it's what I think it is, we're going to go to the intermediate chart. I'm doing this analysis live with you. It's not premeditated, so just looking at these patterns. Once again, -1.8, minus pretty flat on the 21 right now on the daily, and negative on the 40. So we've got 2 of the 3 averages at least minimum trend down levels, and the other one is somewhat neutral. So let's go and hit up to the next level. Let's go up to the weekly chart, which now will show you a couple things, and we, as I mentioned in the daily, we're at a pretty critical level from the standpoint of where we are. Let's take a look at some key elements here. Notice this, just draw an arrow here, the 40 period moving average. I'll bring up the values here in a minute. But look at the PPM1, look at PPM2 and 3, all declining. And the thing I was just talking about right here, you'll see, I was talking about what has to happen at the end of a trend, is that the 10 and 21 begin to narrow. And you'll notice where I just put this small arrow at the top right, that we narrowed, and then everything turns south. And that's where this is probably leading the way for the S&P. And the juncture where we're at right now, I'll draw an arrow here, is this, we're sitting right on the 40-week moving average. And I've talked about this before, just kind of be redundant in case you haven't seen all the shows, but the 40-week moving average is very similar to the 200-day. And this is the juncture where things could change substantially. If we do not hold this level, I'll bring up the values here in a minute. If we don't hold this level, then this is going to be the leader to the downside, and ultimately it's sort of like the Titanic. You don't want to be too close to the boat, because if you get too close, your lifeboat could be sucked down with the wake when the big boat goes down. So in this case, if this breaks down, it's going to pull the other indices down. We've seen weakness in the Russell as well. So all of these indexes are pretty much doing what they're at critical levels, at least from the NASDAQ here. Let's go up and let's bring up these values here real quick. So what is that 40-week moving average? That 40-week moving average is 4,006.90. We are currently 4,051, so we're just above this by a handful of points. We're down 28. We were down 40, I think, earlier in the day. So the way this market's been trading, it's been pretty substantial from that standpoint. Okay, so as we go further, we will see. Yeah, I think we had a little sound glitch there for a second. As we go through this further, we'll go out to the monthly charts and see what we can find as well on this. So let's go ahead and take this off. We'll go to the monthly. And my guess is, which I should have said it before I showed you, now it looks like I wasn't going to say that, but the 10-month, here's the way VPM works, and the way, talking about analysis from a top-down standpoint. So you do your daily, weekly, and monthly analysis. So notice that we are right on the 10-month moving average. And this is significant, and this is why if you just look at daily, you just look at weekly, you don't get the whole picture here. And this, I'm glad we did this, because this has really given me a perspective of the risk levels that I was just talking about on the 40 period moving average. So the 40, matter of fact, maybe we can flop around here real quick. Let's take a look at the value of the 10-month moving average is 40.29. We just looked at the 40-week moving average was 40.06. Very, very similar. And the way the sequence works, if I went to the 40 period moving average on a daily is similar to the 10-week moving average. The 40-week is similar to the 10-month. So those are related. And now this is actually this is kind of cool to find this. Look at what the values are. I'm glad I didn't already know this when I did this analysis. It makes it more exciting, more real, maybe. But this we're looking at the PPM1 on the 10-month on the composite at 106 plus. That's a huge number. 131 and 106, very similar to what we're at on the S&P. So what have I been telling you for weeks now, and as we go through these sessions, anything over 0.25 is a trend. 0.25 will tell you there's about only a 40% probability for the market to decline below it. At 106, it's probably less than 20%. So this tells me we're probably going to hold this level for right now, and that this market's probably going to rebound, that we're not going to get through this level. Certainly if we do go through the 4,000 level on the S&P, or I'm sorry, on the NASDAQ, that it'll probably rebound fairly sharply after that happens. There seems to be substantial support here because of these numbers that are out there. So what it tells me is this is the support, and I'll bring up what we say it was 40.20. Let's take a look at numbers today. Look at the low today, 40.2106. Now we're all the way back to 40.49. So we already bounced 20 handles off of this number this morning. So that is your key pivot number. If I was doing the same kind of work on a daily basis on the NASDAQ, then maybe this should be included. At least we'll do it on Market Thunder shows, so you have some context of what's going on. But this was a huge moment for me. It was an aha moment. It starts to bring in even more understanding that we're just probably not going to go down much. We're not going to do anything right now, which is sometimes maybe that's a little depressing to find that out, because you want a movement down. We're as I mentioned before, from a VPM portfolio viewpoint, we're running 56, 57% on average in cash, and that's probably a good place to be with the uncertainty that's here. There's some pretty good support, but if we continue to stay in this range, guess what? This momentum is going to bleed off. It's almost like you have a half pipe where the momentum is swinging, and each time it swings back, it gets lower and lower and lower until there's a change, unless it gets reset again. And it's a good way to look at how this stuff goes here. So anyway, I'm glad we did this. That was an exciting moment for me. I know maybe not for you folks, but I love this stuff. I don't think there's anything else we can look here. What we thought we would do here is we'll go over to our stocks of the day at this stage, and usually I'm going to bring Mitchell back in live, so Wake up, Mitch. Anyway.
I'm here.
All right, there you go. See, look at that. So here we are back on the screen again. He's a lot smaller than me. I don't know if you noticed that, but anyway. I did that on purpose. I set these screens up. But anyway, Mitch, you looked at some of the stuff that was moving in the NASDAQ, and what were some of the stocks that came out that were pretty big as far as, big movement?
Sure. I think probably one of the bigger ones that's gotten a lot of attention is Groupon, GRPN. And that we're currently using the 1.2 system. That's the optimized system on that.
Okay.
And let's see where we're...
I can bring that up a little bit, and we'll just kind of do. There's several stocks. This is NASDAQ related we're doing, and then we've got some other stocks that we've targeted here today.
Yeah, Groupon at this point got hit pretty hard, and they're still seeing losses for that company. They're down 19% right now on the day. So this is I think one of the better trades to see right here, how we're flat this position right now, long going into this.
Yeah, I'm going to have to bring it up. There's a limitation in TradeStation. I have a long history with TradeStation, and I would never give them one of my biggest secrets on how to do something, because one of the old founders and I agreed to disagree and actually not like each other at the same time. So that's a long story. But so we can't see the actual signals here because they don't know what we know to do. So I'm going to go over and just bring it up in VPM here, and just so we can actually see that symbol there. Sure we are. There it goes. Oh, good. I didn't do a good symbol, obviously. Dyslexia strikes every 10 minutes with me. So
I just figured your Rockstar hadn't kicked in yet this morning.
Oh yeah. So, as people that know me, the Breakfast of Champions right here, Rockstar. Let's see. Here we go. Okay, so we are neutral, as Mitch had talked about. We did have a reasonable trade here on this. Let's take a look and just see what the P&L was on that. Let me get rid of something here. You can't see it, so I'm going to go back, and it's just going to be me on this, looking at this. So we'll go and look at the P&L here.
Yeah, I'd say 85% or 83%, I think, is where it last traded at. That's a nice trade.
Yeah, 83% gain. And now if we go back to the actual chart of this thing again here, so we can see it. You can see that the stock has declined substantially. Do want to point out something here, and I love being able to show this stuff to you guys. You just have no idea, because it helps me to show you how this works. And everybody that was whining and crying about it selling out at the low here and then it rallied. Let me bring up the whiteboard, because this is stuff probably what I've talked about this a million times, is what VPM was trying to do. Let me back that out just for a second. I'm going to change my color just for a minute so you can see this. So what we're looking to do is, of this, I hate that placement, 1 second. From this low to this high, the goal of VPM again is to capture 60 to 80% of that trend. So we could figure it out, but I can tell that pretty much what we're looking at here. And of course, I've lost my cursor. This thing is really, really tricky. There we go. Look at that. Somewhat found it, and it's gone again. It disappears in some of these. There we go. So what did the stock do? It rebounded, did not make a new high, and then collapsed down. And this is pretty typical of what happens, because VPM's trying to respond. The fact that it would be nice if it was smart enough to figure it out. But guess what? Sometimes this thing collapses and goes down and it sells. It doesn't stop right there. It keeps going. So you never know whether you get the rebound, snapback. This is called a right shoulder from a typical technical analysis. But what happened was the trend was broken when we sold it, and that was the important thing. So looks like if I back out of this stuff, I don't know why this cursor is giving me so much issues right at the moment, but it is. I'm just having an impossible time finding it. It's like I can't even get it to. I know if I can reset my my whiteboard somehow, it'll all be wonderful. But there we go. Escape worked. I learned something.
I was just going to suggest that.
Escape worked. Okay, so I'm learning as we go here. I never tried that. But the what I was trying to show you here is that a couple things have happened. The PPMs are actually starting to turn up. While this stock is getting clobbered today, I guess, what were you saying, Mitch? It was down 19.21% today. It's a long ways from buying, but it is completing. And this chart does not reflect the full movement. It doesn't reflect today's movement. So if we go back here, you'll see the contrast of what we're looking at is right here. So I'll make this a little easier to read. But you can see we were in this sideways mode, but now look at the PPMs. This updates real time. They've all collapsed, and now we're back into minus 3.70. That's huge. You can forget about this stock for about 6 months. It's not going anywhere. And even if it starts to stabilize, there'd be no reason. And we've talked about this stuff, and I think talking about the trading models is a good thing to talk about fairly quickly here, is that the trading models are trying to find the next trend. And if there's no trend, let's say the market stabilizes, some folks will think, oh, this stock's really cheap, I want to buy the stock. Well, you're holding risk all the time. And I would rather be out of the stock and wait for it start to move and find a trend as it starts to go up and then play it versus guessing that it might be a good place to buy it. And that's the difference in modeling and trend following versus trying to buy some extreme book value or something like that. One of my mentors was a huge book value guy and was a great trader, but he used options to hedge all of his bets when he was guessing at the lows. So he always had a wrapper around them, so he knew what he was risking. So we're not doing options here. We're doing pure trends. So from an option strategy, there are things you can do when stocks get down to extremes, and you can even bring in some income and other things while you're waiting, but that's not what we're talking about here. So those that's an interesting. So this, what else was out there, Mitch, real quick?
Another one that's on the list is Yahoo. YHOO.
Yep. Mitch sometimes treats me like I don't know anything. I'm teasing, but it's really kind of funny. Okay, so Yahoo. Let's see. Are we still long this thing?
This one is another position that we're currently flat.
Okay, that's what I thought, because I'm showing flat here in 1, 2.
Yep, and that's the optimized trade
good,
system right now.
Good. So here we go again. I'll try to bring my whiteboard. At least I know how to bail now. The escape button is pretty handy. I'm glad you can't see Mitch's expression right now. He's kind of trolling me a little bit on this. Not really. But anyway, this right here is exactly what we're talking about. Huge trend goes, pretty much from October of 12 all the way to 13 into 14, and we get out. And these are the type of things that we've seen a lot of exits coming in the last several weeks. Yes, we have downscaled our bullish percentage, but these are the things that are taken. We've had stocks that we've been long since fourth quarter of 2012, and these are long-term profits and nice ones at that. By the way, 16 to 35ish. That's a nice trade, I think. I could be wrong, but it looks pretty good.
Yeah, 127% gain on that. I wouldn't mind that at all.
Yeah, but these are the things I've been trying to talk about in a dialogue that we've had on this channel, been fairly well watched. I know that everybody doesn't have time to just sit around and listen to me babble about the markets for an hour, but there's a lot of tidbits of information and educational stuff that I'm doing here that I'm hoping that really will, in the end, will make you a much better advisor from having context of what you're doing for your customers and even helping you to adhere to the modeling process at a higher level. Look at that. Escape gets me right out. That's awesome. All right. Learning experience for me today. So Yahoo's good. Look again. Minus 1.19, 0.68, and the 40, which is interesting, is actually positive. So it's got an upward slope. But I just want to point out here that here we go again. Look at the. Let me just bring the whiteboard back. It's part of everything that we're doing here. Here is the trend I've talked about where it spreads out. It gets to the furthest point. Then if you notice, the red line starts to contract towards the cyan line, and they meet. They ultimately meet. In this case, we exited the position a couple bars after that, primarily because of some of the momentum indicators and other elements that are in VPM. So once that trend was kaput, when we're out. And now there's actually, even though this stock is down pretty good numbers today, in this zone is some pretty good support because we have the 0.48 of the moving average going here, which if we go over and take a look at what that value is, I'll bring that up here. That slow average is 35.18. So we're trading just slightly below that right now. And the chances are that by Friday, if I were a short-term trader, I'd probably go and start to bring this up on a daily graph. If I was just trying to play with this thing, I'd try to find in this pattern here. I just brought the daily up where you could probably go in and buy it, and probably some option strategies would be a lot easier to play here than it would be on an outright purchase of the stock. And we can also go down to the 60-minute graph as well and see. You can see the breakdown today, and then you can see we're back at the lower end of the pattern that we have been at for a while. Not sure there's any real reason to look, but you can see the long-term trend actually on inside a TradeStation here. The long-term trend, we've owned this stock from 15-19 on a monthly basis. It's been long, going back to what is that date? April 30th, 2012. But these trends are still doing the same thing. So we've got some consolidation up here. So this stock is probably going to become a non-momentum stock, and there's not going to be a lot of bringing some of the old floor terms, a lot of VIG or a lot of momentum that's going to come back into this particular item at this time. So let's do what else? Let's do one more. Maybe we'll go.
Sure.
What time is it getting to be? Yeah, let's go ahead and let's do some of the ones we were going to feature anyway, which is FFM.
WFM.
WFM. What did I do? WFM. I actually did the right thing. I just put it up wrong. So classic stock. The CEO. I used to live in Austin, and these guys are just on a disaster course here. Now we have 3-2 on this one, Mitch.
1-2, I believe.
1-2. Okay. Because I'm not seeing an exit on here.
Let me double check.
So I can go to VPM, but the once again, big trend up. This thing is slicing through everything. Look at what we have here. Minus 3% on the PPM1, PPM 2.80, and then we have a longer term average, the 40, which is equal to, like I said, the 200 day is at plus 0.81. So we're probably going to rebound back toward that number.
Is that the weekly chart there, Bob?
It is the monthly, but thank you for that. So that's why we're not seeing the...
Yeah, we are flat that position on a weekly basis.
Yeah, there we go. So that's why I knew we were supposed to be flat it. But anyway, yeah, that makes total sense if you have the right. So we were on the long-term chart looking at a minute ago, the monthly. So here we're seeing this acceleration minus 294, minus 154, minus 0.72. All three averages on a weekly basis down, and we are out and not coming back for a while for this one. When you see a weekly breakdown like this, you can, especially on a trend like this, it's going to take the better part of a year once it hits bottom in prices for it to consolidate to even come back in. So I guess that's another characteristic to keep in mind when you're looking at these stocks. Go to the next one, Abbott, ABT.
Yeah, that one currently we're optimized at the 3.2 system, and that's another one we're flat.
Yeah, I wonder, is this a new symbol? That's not a new symbol. Why am I only getting ABT, right?
ABT.
Huh. There should be longer data than I'm seeing here. Let's go over to VPM and take a look at this thing. I blew this up so we could see it a little better in the last one. So go back down a little bit here, and let's bring up ABT here. Not sure why they don't have more data on the TradeStation side here. ABT flat. This is I think I would consider this to be a pretty ugly pattern. This is one of those, as I bring it into the screen here, where this is actually one of the things I talked about. All these shows are starting to come to become one for me. I don't remember where I talked about them, but I do know I discussed this particular situation. Is that we had this is one of the things that I programmed not to participate in. So we've got this big move up here in this good trade. We had another trade where it looked like it was going to rally. It failed, got out right away. And then we moved from 34 to 40. Everybody's like, whoa, wait a minute. Why didn't we buy that? And this is one of those, what's considered, from my viewpoint, a very risky trade. And what you see here is you see this choppy action. We trade from 36 all the way up almost to 40, all the way back to 36, 40, and then back to 37. So you start to get this erratic behavior. There's just no reason to be involved in these kind of stocks when we get to that level. I wish for whatever reason, we had better data, but you can see it here as I bring it back into TradeStation. Let me just look and see what's going on here. Last date. Yeah, it's supposed to be going back 10 years. It's not. But anyway, this erratic behavior, this is the type of stuff you really don't want to be involved in, and the 1 week wonder is always tough as well. So let's go back to weekly. We are on weekly. Let's try EA, which is having a pretty good day, if I recall.
It is. They're up nicely. We're long it currently on the 1.2 system. For those of you that aren't familiar with EA or Electronic Arts, I know if you go to Costco or even Office Depot, a lot of these places that sell just about anything, they've been selling the latest game, Titanfall, and that's been beating quite a few analysts' expectations on that. So you'll see little standees all over that have a giant robot and a guy standing on it, and so that's one of the big drivers, at least this quarter, when it comes to their performance, and they're seeing some nice gains today.
Yeah, I'm just trying to, evidently I had 3-2 on this chart, so I thought I was on 1-2. And
maybe they're doing so well because all those 20-somethings that are without jobs are at home playing that game or something. I don't know.
They're on Xbox One, right?
They're on Xbox One, yeah.
Okay, so here we are. You can see the surge. I've got the right model. At 3.2 was on there before, so. But you can see, let me condense this just a little bit. TradeStation draws a line here between the buys and the sells, and you can see this has been a really good stock going back once again to October of 12. We had a pretty good size move right here from this point here to here, where we missed out just a little bit of the bottom here and a little bit of the top, chopped it off. And it says like an MP3. You chop up the tops and the bottoms, and that's what we're doing. So we got this little decline in this pattern, and then we got the breakout here, and now we've got something working again as the trying to play into this next trend. Once again, 145 ppm, 189 and 59, all major trend levels that are unfolding here. So that's what you want to see. That's what we're participating with. And there's I think last night we ran models on 18,375 different stocks and ETFs and mutual funds. So the bulk of it's a big world out there, and I think that it's there's just so many items. I think in our system, if you turn on CNBC, I saw one of the commentators make a comment the other day, and I'll bring Mitchell back with me here. I hope. Here we come. He's shrunk a little bit, but yeah, one of the commentators was talking the other day that there's all these thousands and thousands of good companies out there, and everybody's focused on Apple.
Yeah.
It's like the only stock that exists is Apple. So
yeah, I think I checked just last night, and that's still the number 3 ticker getting used in our system, and that's right behind a couple ETFs.
Right.
So
yeah,
it's what everybody wants to watch for whatever reason.
Yeah, and meanwhile, there's some great trades out there that are moving in the background. So that's one of the things that we'll be hitting on in Process Warriors. Is we'll be talking about. That's why you want to screen. That's why you want the human bias out. Forget Apple. Go to rotate your stocks and find some good things to make some money in. There's lots of things to do out there. I feel like I'm watching Honey, I Shrunk the Children or something with Mitch So Small. Anyway, maybe get Rick Morales to show up as a guest one day. So in conclusion, as we wind down today's show, looks like we got just a couple minutes to go. Let's go back real quick and take a look at. We haven't looked at the real short term. We are seeing the market trade off the highs again, and I want to get into these cycles and see where they're playing out at now. So it looks like the way that the 5-minute chart's setting up. So sometime in the next hour or so, we'll hit another bottom cycle. My guess is, from what I've seen here, we've seen the high of the day, we've seen the low of the day, and we're going to continue to consolidate into the close, and we'll end up somewhere between where we are right now and where we were this morning. I don't see anything exciting. I do think there's some risk in the markets rolling over. So tomorrow, Thursday, Process Warriors, we will reveal some new charts that we have. We've been talking about the trade impact charts, which has to do with the portfolios that you folks are all using. We want to show you on that show exactly how the system works and how it ends up building equity over time. And that's the good, bad, and ugly. All the trades are what contribute to make this thing work. And right. Mitch, you got anything in closing that you want to say? You've got 22 seconds.
I got 20 seconds, huh? So, yeah. Well, I'd encourage you guys, join us on Process Warriors. Despite the technical difficulties that we had yesterday, we got a lot of very positive feedback from internal guys as well as advisors out there in the field that are really finding this valuable. So, just stay connected, and I guarantee we're gonna make good use of your time.
Yep, I think that's good. Look, Mitch, you're going to be bigger in 20 seconds than you were. Now you're bigger than me. So
compensating for the height differential between the two of us, right?
There you go. Anyway, folks, once again, we really appreciate you taking the time and doing this stuff. We've had some great feedback. We're going to continue to do it. We're having fun, and we're going to be bringing in new friends in the next several weeks that we don't have right now, as we're going to be exposing this show to folks other than our customers. And we do invite you, if you have friends that think this would be interesting for them, please have them come in. Process Warriors as well. Maybe they want to find out what we're doing. That's certainly a good place to do it. Anyway, folks, have a great day, and we will be talking to you tomorrow, 3 o'clock Eastern Time on Process Warriors.